Hi, I'm George Mitten, investment writer at Nutmeg. I'm here with James and Pacome from the investment team who are going to give us an update on the markets. Let's hear what they've got to say. What's happening with the US-China trade war, and have events in Hong Kong changed the outlook?
So the US and China trade talks have continued in much the same vein, and there does seem a willingness on both sides to enter into an initial deal. However, the optimism has really faded since that October 11th announcement by President Trump that there was a tentative agreement on an initial first stage of a grander trade deal. And it seems that the stumbling blocks are still in place really around intellectual property, and both sides at this point unwilling to compromise on that. But we think we will get a deal coming through, at least a first stage of a deal coming through in the next couple of months. In Hong Kong, the protests continue, and equity markets locally have been volatile, particularly as the student protests have escalated in the last week. However, we don't expect that to have a significant impact on global investors. Hong Kong stock markets are only around 1% of global stock markets, so it's a relatively limited portion of the overall equity universe for investors, and therefore the performance effect of that volatility shouldn't really be felt by many investors.
So what's the latest with UK politics?
So in the UK, we've reached the real legwork phase of the election, and we're getting manifesto promises daily from different parties, although one issue in particular continues to dominate the agenda, and that is Brexit. Markets reacted positively, currency markets reacted positively. The sterling rallied on the announcement by Boris Johnson this week that all Conservative Party candidates that are standing will support his deal. But we still think the parliamentary math is very, very tight. There's still the potential for a hung parliament, and therefore we remain very flexible in our UK exposure, both towards equities and also bonds.
And earlier this month, an interesting news is Moody's placed the UK on negative outlook for further rating. It's the main reasons that were given was the political paralysis, and as well the promise by the main political parties, the Labour and the Conservative, to increase spending if they win the election. So what does it mean for the country? Well, Moody's was pretty quick to react to the news flow somehow, and the UK notch remains pretty high overall by global standards. It's the third highest, and it's only below countries like Germany, Australia, and Austria. So really, the next election and how the Brexit play will give us direction on if they act on their negative outlook and they effectively downgrade the UK. We still believe they were pretty quick to react, and we've seen them sometimes backtrack in the past after acting quite quickly.
Markets seem to be more optimistic now. Is that true?
Yes, we've seen investors becoming more optimistic over the last few days, actually, or few weeks, and it's really a contrast compared to what we've seen this summer, where investors were quite pessimistic overall. Bond yields reached an all-time low, and in parallel bonds reaching an all-time high. And if we look at the most recent survey by Bank of America Merrill Lynch, they highlighted that investors has decreased the most their level of cash since 2016, and as well are becoming much more optimistic on global growth. So what does it mean as well for assets? We've seen risky assets being repriced and equity really going up over the last few days and few weeks. And in contrast to that, we've seen more defensive assets like bonds, the US dollar, yens, or gold being sold off. So don't be mistaken, this can be quite short term, and as well we've seen some reversals that can happen pretty quickly. However, it's still a real shift in sentiment, and we're going to watch it actively in the coming months and weeks.